What's up everybody? Today I'm going to teach you an ICT strategy that I use specifically for crypto trading. This can be used on forex and indices too, but I use it specifically for crypto and it works amazingly. You can see in the screenshot, my PNL last month is about 2000% with this strategy. I haven't used any other strategy last month and I just used this strategy and my PNL is 2000%. So this strategy alone is enough for you to quit your job and be a full-time trader. Make sure not to skip any part and watch the whole video. And this strategy can be used on any coin if it's Bitcoin or any other altcoins, and it can be used on any time frame if it's daily, 4 hour or 15 minutes. So first I will show you this strategy on the daily and then I will show you another example on 4 hour. But first let me explain few things which I'm going to discuss in this strategy. The first thing is order block. Okay, what is order block? There are many definitions of order block, but the one that I use is like this. Let me show you. Let's suppose this is a candle on daily. Okay, this is a down closing candle on the daily time frame. Okay, then there is another. This one candle shows a single day. Okay, this candle shows one day and this candle shows another day. Then on the third day we got another candle, but this time it's green, it's bullish candle, and you can see that this candle, the body of this candle has closed above this previous candle. You can see this is the body of the previous candle and this is the body that has been closed above. Okay, so this is what I call the bullish order block. Okay, this is called bullish order block. What is bullish order block? When you get down closing candles on any time frame, whether it's daily, 4 hour or 15 minutes, and then all of a sudden you get an up closing candle which closes above this previous bearish candle. This is called bullish order block, and this is the example of bearish order block. Let me show you. This is an up closing candle. Let's suppose this is a 4 hour candle, then there is another one, and then you get a candle that closes below it, a down closing candle. Now this is called a bearish order block. What happens in such cases is that the price comes down and then the price goes up. Okay, this is what ICT teaches you. Okay, and then the price goes up and down. This is bearish, this is bullish. This is teachings of ICT. Okay, then there is another concept which is called breaker block, and we are going to use breaker blocks. So let me decrease this opacity. Let's suppose there is a fair value gap here. Let me draw it. Another candle, another bullish candle. Okay, let's suppose this is another bullish candle and this is called a fair value gap. You can see this gap, this is called the fair value gap. You might already know if you are an old student of ICT, this is called the fair value gap, the gap between the bottom of this candle and the top of this candle. This gap is called the fair value gap. Now what is breaker block? If you get a candle that goes down like this and it closes below this fair value gap, you can see that this candle has closed below this fair value gap. So now this fair value gap will act as a breaker block, and instead of pumping, this thing will go down. Okay, like this fair value gap will provide resistance. Like we discussed, this was a bullish order block and the price was supposed to pump from this fair value gap, but here what happened? Another candle closed below this fair value gap, and now this fair value gap will provide resistance and the price will go down. And in this case what will happen is let me draw another candle, increase opacity. This is another down closing candle, and now this will be your fair value gap. Okay, so in bearish order block, it is the price is supposed to go down from this fair value gap, but if it comes like this, if you get something like this, you get a candle which is bullish and it closes above this fair value gap, then it becomes a breaker block and the price will go up from here. So these are few things that you have to keep in mind, and now I will give you some examples from this chart. This is the Shiba Inu chart, the daily chart, and you can see that here we got an order block, a bullish order block. You can see this was a down closing candle and then we got an up closing candle, and this was the fair value gap. Let me draw the fair value gap here. This is the fair value gap. So this is a bullish order block, and you can see the price came down into this fair value gap and then it went up. But in this strategy, we are not going to use this fair value gap. Like, my strategy is purely based on breaker blocks. You can see that then the price came down and it closed below this fair value gap. Let me show you. The price came down and it closed below it. Okay, now it will provide resistance. You can see that once it closed below it, the price went up and then it went down. Again, the price went up and it went down. Now in my strategy, you have to wait for an up closing candle, a candle that closes above this fair value gap, and you can see that this candle closed above it. And once you get a close above it, then you have to set your orders in this fair value gap, and your stop loss will be below previous swing low. Your stop loss will be around here and your orders will be here, okay, in this fair value gap. And you can see that this chart, this ship chart came down, filled this gap, and now it's going up. And if you see my Twitter or my Telegram, I already shared these entries. Like, my orders were around here and it got filled, and today it pumped. So this is how I use this strategy. Now I will show you the strategy on smaller time frame, like 4 hour. Let me remove all the drawings first. Okay, so I will remove the drawings. Now on 4 hour, you can also use it. You can see that this is a bearish candle followed by an up closing candle. So what you got a bullish order block and this fair value gap. But then what happened? It closed below this fair value gap. So now this will provide resistance, and you can see when the price went up into this, it came down. Okay, like this will be one of your entry. The stop loss will be around here, and you can see that this price went down. Okay, now here you can see that we got a close above it. Okay, and then it pumped, but we got an entry on the daily. Here on 4 hour, it didn't give an entry. Like, it was supposed to go down and then pump, but on 4 hour it didn't give an entry, and on daily we already entered around this area. Now again, if it comes down to this area, it will get a pump, like somewhere till this area. Okay, so again you can long in this area, and your stop loss will be below this previous swing low. Okay, the stop loss will be here. So this is how it works. You can use it every time, okay, on any coin. If it's Bitcoin or any other coin, this works amazingly well. But first you have to retest it and you have to practice it. Thank you guys.